All right, Matt Davio here with James Altucher. I want to say Altucher. I apologize if I say it during the interview. I'll say it right up front. So, Altucher, I liked your. You could tell.
It's all good.
Tell our audience how you said to say your name because I think I get a kick out of that.
Well, it's like I'll touch her fast. So James Altucher.
Altucher.
Yeah.
Okay. What's the origins? Yeah. Where's your family originate? Where are you from?
Well, it's really an Ellis Island origination, but my grandparents on every side were kind of from Russia, Poland, Jewish ethnicity.
Yeah. Eastern Europe and Russia is where they're rooted. So, did you grow up in New York City? You went to Cornell. I've been studying up a little bit on you. I've read you for years. I followed you on RealMoneyStreet.com. I've read
Thanks.
you in Financial Times. You're writing now for AOL, I think, the Daily Tribune. So you've kind of written on a lot of different financial publications. I think you even wrote for Minionville. So we'll get into that a little bit, financial writing and trading. Where did you grow up? Did you grow up in New York City?
No, I was born in New York City, but grew up in New Jersey.
New Jersey?
Nice, comfortable, suburban New Jersey.
Okay. And
Exit 9.
I'm sorry?
Exit 9. Everybody in New Jersey is identified by their exit.
Exit 9, okay.
So I'm an Exit 9er.
And what goes on in Exit 9? What was it like growing up on Exit 9?
It was crazy. It's so crazy I can't even talk about it in this interview. No, really, it was just suburban. It was like everybody had parents who worked in New York City, and you knew your town and the straight line between your town and New York City, and that's it.
So at what age did you start sneaking into the city and experiencing the city since, without your parents?
Probably when I was about 13 or 14, I would hide in the back of my house, wait for my parents to leave for work, and then I would get on the New Jersey Transit bus to New York to hang out. I hope my daughters better not be listening to this. Don't do that.
Are they getting to that age? Let me ask you.
They're 10 and 7 years old.
Yeah, I got a daughter that's 12, so I hear you. It's starting to get to those scary ages. So.
I don't even want to know about it.
Yeah, well, you've got two girls. You know how it is. Girls are. I've got one girl and three boys, and they're very different beasts for sure. The boys need to be let out to run like horses, and the girls need more mental stimulation. The boys just need to run out in the pasture. That's their deal, at least so far.
That's funny.
So growing up, what did your parents do? Did they work in the city? Were they typical kids there on Exit 9? Were your parents?
Yeah, they were both in the computer science field. My mom was a computer research scientist, and my father had a computer software company.
Okay.
In the 70s and the 80s.
Gotcha. So they were in that.
And they actually met at a computer software company in the 60s.
Okay.
Just sort of rare back then.
So they met at work, married, and
yes.
Stayed in the city, working, and raised a family off Exit 9. What kind of things did you like to do? You started. You're quite a master chess player, so you must have.
Yes.
You must have played chess from a young age.
Oh yeah. Well, it's funny actually. I learned the rules when I was a little kid, but I didn't start playing seriously till I was about 16, almost 17 years old. And then I started taking it very seriously. I became, I played 3-4 hours a day. For a long time.
I'm curious, when you started playing in your were you marrying that with your trips to the city? Were you playing in the city with people there?
Oh yeah, definitely. I mean, I would go into the city to play because that's where all the strong competition was.
Yeah.
And so I started playing in tournaments when I was 17, and by the time I was 18, I won New Jersey's high school championship, so really I had to go to New York City to find my competition.
Wow. And did you ever play for money?
Oh yeah, I mean, every day I would play for money. In Washington Square Park in the city was a great environment back then. Now it's not so much, but back then it was great.
And, there's a lot of different types of chess. Did you have a specialty? Were you into speed chess or anything along those lines, or were you just playing traditional, game?
Well, I was playing in tournaments in order to improve my ranking and get that kind of master ranking. But I would play, blitz chess. Really, I enjoyed playing the most. And now all I play is blitz chess. Just speed chess.
So describe that. What is blitz chess?
Each side has a clock, and you set your clock to how much time you have. And then if you run out of time before checkmating the other person, you lose the game. So the typical speed chess game is 5 minutes each side. But, in Washington Square Park, it would be more like 3 minutes each side. And then there was a very, every game was a negotiation. Who would give who odds? Sometimes you would take 1 minute, sometimes you would take 5 minutes, and the other person would take 1 minute. So the clock is a good way to level the playing field.
I want to ask you a little bit about risk taking risk reward when it comes to the clock there. What the different types of games and the speed there. How did that change, or your adaptation of the game? How does that happen? When you're playing against the clock versus just unlimited time on a move.
Well, that's a great question, actually. When you play in a fast game, sometimes you make a move which is not the correct move, but makes the position ugly. So there's certain types of positions that I might be comfortable with that my opponent might not be, that if I can make the position ugly in that way, I know he'll use more time than me, and having a time advantage but maybe not a board advantage might be more important.
Interesting. So, in other words,
you might sacrifice a piece, which, in order to get an attack on the king.
Right.
And, in a long game, you might decide, well, chances are this attack's not going to work, and he's going to have the time to figure that out. But in a speed game, he's still going to have to spend time to figure it out, but he'll lose on time.
So, it's interesting here, to bring a trading analogy. It's kind of like, sometimes you got to take a little heat. Sometimes you have to take a little loss on a trade, maybe size down the position to really get comfortable and let the winner run. Do you think the skills that you learn from playing chess continually apply to how you run your hedge fund and how you run trades and investments?
Absolutely. Not necessarily in the way I just described. Like, you want to avoid sacrifices that don't work, particularly when you're investing. But I think in terms of, several things. One is, when you play chess and you're playing obviously to win, you want as many things going in your favor as possible. So for instance, I want to have his king be exposed, but my king not be exposed. I might want to have a pawn that's called a pass pawn. There's nothing in front of it, so maybe it could queen. I might want to have an open file for my rook, or I might want to control the center. Ideally, I want to have all of these things. Now, in stock investing, it's the same thing. You don't want to have just one thing going for you. You want to have many things going for you. So, for instance, maybe I want the stock that I'm buying to have a low price earnings ratio. That's one thing. Maybe I want it to have a lot of cash and no debt. That's another thing. Maybe it's ideal for me if Warren Buffett happens to own the stock and he bought it at a higher price than me. That's another factor. Maybe I want that the stock actually has fallen 10, 20% irrationally for some reason. That's another factor. So you want to kind of have this, essentially this confluence of factors come together to say, yes, this is the move I'm going to make. Same thing in chess. You want to have everything pointing to the fact that, yes, this is the move you're going to make, so that it's as safe as possible.
So statistically, you've kind of done your back testing, if you will, in both investing and stock playing. You have a scenario of moves in the game of investing and the game of chess that you're going through and saying, okay, if, like you said, this group of items are lining up, and I've got a checklist of 12 of them, and 8 of them are so, and I weight 4 of them differently than I do the other 8. Then maybe it's time to put on the position, put on the trade, or maybe it's time to put on a piece of it and leg into it. It sounds very similar. I hear a lot of similarities between, again, that's giving up that pawn because I know what's going to come next. The next 4 moves I have in the game. Similar things happen when creating a portfolio. I think as a manager myself.
Yeah, I mean, it's very similar.
Okay.
So I just want to mention also with chess, there's another aspect, which I find to be very similar to how I approached investing. When you're trying to get good at chess, it's not a matter of just simply playing a lot and improving that way. You have to really study. You have to when I was 17 years old, I probably ultimately accumulated more than 150 books about chess. And I would study every aspect of the game. So the opening of the game, the end game, when there's very few pieces left, the middle game when you have to study, what's called tactics or combinations and positional planning. I would study the games of all the world champions from the 1800s up till now, whether it's Bobby Fischer or Gary Kasparov or back to Paul Morphy in the 1800s. So so this way you become very familiar with every style. The way I approached investing was very similar. I've studied everybody from, I've read everything I could find about Warren Buffett or about statistical investing or about hedge fund investing, everything about arbitrage, value investing, growth investing, convertible arbitrage, merger arbitrage, investing in fixed income, investing in gold, silver. How do you take into account the interest rates in all the foreign countries to invest their currencies? So it's a similar type of approach. It requires years of study and studying of every aspect of the game.
Right.
And stock investing is a game. It's whether you call it gambling or a science or a sport. I mean, it's not a sport because it's very serious. It has to do with money and in particular other people's money. But the way you think about it, you're up against a million other competitors every day and you're trying to defeat them.
Mm-hmm. I agree. So you take a very macro approach to, I call investing the greatest game on earth personally. I agree with you and it is not, I'm sure you would agree, James, that through all your studies, you have not found a holy grail. Rather you've put
That's
together,
right.
You've put together this confluence of major time studying to kind of statistically come to some quantitative suggestions or opportunities that provide you a chance to make money consistently.
Right. That's absolutely true. There is no holy grail. I mean, and I know some great investors and traders, like people you'll never hear about. They don't write blogs. They don't even trade hedge funds, but just truly great at what they do. And every day, even these same people start off the same way. We don't know what's going to happen today. And in fact, it's those people who really say, I have no clue what's going to happen today. It's the humblest people in the world, make the best traders. And it's just every day starting with a clean mind. In some sense, it reminds me of that Zen book, Beginner's Mind, where you have to approach, life as a blank slate every day. So you can really appreciate it. And I think the same thing holds true for investing.
Yeah, I think this is a fantastic point you're making. Is you can have a bias, bullish, bearish, neutral, and still on a macro level, and that can be something that you have to put aside when you're trading on a shorter term basis, or you're managing money on a time frame that may be different from your macro perspective. And I think that's where a lot of people get caught up, is trying to play that game of, hey, I need to predict that market. And I think that that predictive sense really is nothing more than to feed, the false sense that I know what's going on, or the ego. And the ego is probably in my opinion, and, me, it's probably the biggest fault I have when I'm in there participating. I've got to put that aside and just say, hey, I don't know what's going to happen. Here's my risk in putting on a trade or taking a move on the chessboard, and I accept that.
Look, I'll tell you, it really, and you know this, obviously, it's what you were just saying, it really is painful, horribly painful to lose money. And that's the nature of risk. You're you're risking feeling that pain. And it's the same thing. I'll relate this back to chess again. When I would lose a game in a tournament, say, when I was a kid, I would be in so much pain. I wouldn't be able to sleep at night. I'd have to take off school the next day. Like, it was horrible. I don't like that feeling. I really don't like to lose money. And the best traders I know, I remember I met this one guy. He was actually a neighbor of mine. He worked for a massive hedge fund. He actually worked for not the hedge fund side, but they had a market making side, and then he would trade his own book. Anyway, I never saw this guy have a losing week. Rarely had a losing day for years. I mean, we would talk about trades every day. Rarely had a losing day. And he would talk his trades with me while I was in them. And just the humblest guy out there. He really just looked to everybody and all sources to try to figure out what's going on with the market. And if he was down on a trade, he was out of there. He was just very quick. He'd form an opinion, make the trade, and be out within minutes sometimes. And he was just very good at, like, being very humble. And fortunately for him, he then left that fund and struck out on his own and has done very well since then. And the firm that he worked for was a little firm called Bernard Madoff Securities, so that went out of business. But he was on the legit market making side. So.
Well, I want to come back to, you brought up the Madoff story, and I've read some things about how you had some touch into there, and I want to come back to that in a minute, but not yet. I want to ask you, because you brought up kind of the Zen spiritual side.
Can I interrupt for 1 second, actually? I just got a message. I have to just confirm really quickly on a CNBC appearance. Okay. So let me just. All right. You can edit this part out. I just have to.
No, it's great. CNBC is more important than Matt Davio. I understand.
No, not at all. I just have to make sure that they schedule me for tomorrow.
I'm going to start asking you this question because it's something you can listen to while you're doing that. You were talking a little bit about the Zen mind, and again, nobody likes to lose, but it's a part of any game. And this is the one thing I try to teach to my kids, is that losing is okay, and you learn from losses, and you learn from doing things the wrong way. So that's one part of the question. How do you deal with losses? And the second part is, do you do any type of spiritual practice? Do you do meditation, yoga, religious, prayer, anything that helps you get through, the rigors of investing and trading?
Well, so the first part of the question is, I've obviously experienced much pain in investing over the past decade. I really would not recommend this profession for anyone. It seems so exciting at first, and you get sucked in, and once you get sucked in, it's hard to get out of it. But it's an enormously painful profession in so many ways. Unless, I guess, you're George Soros, but I'm sure for him it was very painful too in his first 10, 20 years of doing it. Yeah. Those are the times you learn. You don't really learn on your successful trades. You learn when you're burned. Like a kid learns not to touch an oven when their hand goes on fire. So It's the same thing here. I've lost an enormous amount of money in my day. So, not all at once, but and it's every single dollar is painful.
So what is your worst trade?
And yes, you have to.
You brought it up.
Sorry.
What is your worst trade?
My worst trades were from before I really entered the profession, which is probably why I entered it, was to figure out how to avoid those worst trades. Okay. But, I came out of the dot-com boom a little bit. Like, I had a software company in the 90s. I basically made websites for entertainment companies. Okay. So I made websites for HBO, Warner Brothers, New Line Cinema, Miramax, all the record labels in New York City. And we were very successful. I sold that company, and suddenly I had stock in an internet company, and I had no idea what to do. When I worked for HBO, for instance, my job was interviewing prostitutes at 3 a.m. and putting it up on their website, and now suddenly I had money to trade stocks. So when you think you're smart in one area, you think you're smart in other areas. Yeah. So I started trading all these internet stocks, and then I started a venture capital firm. with about 120 million in it, funded by a bunch of the main banks. And I was on top of the world. We opened up doors of the venture capital firm in March 2000.
Perfect.
And, we top ticked the internet market, and it was ugly in every possible way. So it took me a while to kind of recover from that experience.
So, this is interesting. I didn't know this. I'm sure it's pretty public. I'm sure you've written about it. But so again, March of 2000, like you said, obvious high of the bull market. We have not even gotten back to the highs as far as the internet stocks, and that's the space you were in. So 120 million. What did you take it down to?
Well, we actually were fortunate in that we did not put a lot of money to work because after April 2000, the IPO market completely dried up. And that was sort of our indicator about whether we should put money to work, as whether or not IPOs were happening. And they simply weren't happening. So our largest investor, InvestCorp, absorbed in the fund, and we didn't really lose a lot of money. It was just myself personally, when I was trading stocks around that time, I had no idea what I was doing. I was just buying internet stocks, and of course that was the wrong thing to be buying then. So what I did was I wrote a bunch of software to just model the markets and figure out what makes stocks move around and how do you model volatility. And I started trading according to that, and that started doing very well. Particularly, like, that was a very volatile time, and tech stocks, people still had no idea where they were going to end up. 2001, 2002, it used to be a no-brainer. If a tech stock fell 20% in a day, which happened often, you could buy it and sell it 6% later by the end of the day. It was an ATM machine.
It was.
And it was great. And so then, but it took me a long time to kind of sort of narrow in on that type of trading approach, and that ended up working well for me. And that strategy still largely works well, but with some modifications.
Okay, so I will touch on that. So again, two things here that I heard you said that I want you to come back to, because I see this a lot, and you've probably seen it a lot also. A lot of smart people, doctors, lawyers, engineers, say, "Hey, I can figure out this game of trading, investing. I'm as smart as James is, so I'm going to go out and try it. I'm a smart guy."
They're a lot smarter than me, by the way, but yes.
They are. And, and they're smarter than you and I combined, absolutely. I mean, but the thing is, it does not, a lot of what if you're a doctor or an engineer or a lawyer, it's the hardest thing to describe to people, but those professions really do not carry over very well into the trading world, because all logic, I think, is thrown out when you step into this plane space.
That's right. Put it this way, it's very, very hard to trade. I mean, very few people, I know a few people who could turn nothing into millions of dollars. And I know a few people who can consistently return 10 to 20% a year. But it's very, very few. It's very difficult to trade and to invest. Look, Warren Buffett, who's maybe the best ever, returns on average 30% a year over a 40-year time span, but even he was down, in 2008. So it's very difficult. And a lot of I just want to mention, a lot of these guys, like the doctors and lawyers who start trading, they want to return 500% a year.
Right.
And any less is not good enough for them.
Yeah.
So, because they're smart. And that's just very difficult.
So again, you had, like you said, you had some early success blindly, luck a little bit, as you said. You got into the business, and you didn't really, you got tripped up by the speed bump of the market there. You went, real quickly. It sounds like March to April, the money was pulled away. So you learned a very valuable lesson without extremely financial dire circumstances. It seems to me,
it was pretty extreme, by the way. My high to my low.
Okay.
So in the 2000 to 2002 time frame, I was definitely trying to figure it out by mid 2002.
Okay, but you went through, so you did go through a big drawdown period and experienced that pain, and that's a deep pain. So going back to the follow-up question I had earlier, how do you deal with that now? How did you deal with that then? Not only change your ways and look at yourself in the mirror, obviously, but meditation, yoga, do you still employ things like this on a day-to-day basis that get you through?
Yeah, I think meditation is very helpful. And that was very helpful to me then and periodically since then. I mean, it's probably the sort of thing I should do every day, but I don't. But it's definitely, people in daily life very rarely take a deep breath. So imagine if you had to just sit down and for 20 minutes, just relax and just watch your breathing. Most of the time people are stressed, so they breathe with very short breaths and they don't really realize they're doing that. But your body wants oxygen, and the oxygen goes to your brain and it helps the blood circulate, it cleans out your blood, and it helps the neurons in your brain connect a little better. And so imagine if 20 minutes a day, you just stop what you were doing and you made sure you were breathing okay. Not necessarily taking huge deep breaths, but just make sure you were breathing okay. If you did that 20 minutes a day, that's a very healthy practice that helps deal with loss and pain. And it also helps you enjoy the good things a little better too.
I agree. Similarities between, I always say, yin versus yang. The inhale, exhale of the markets is natural, and this is something that you touched on, kind of a style that you got into. There is a natural breathing, if you will, in the markets, and it sounds a lot to me what you described and what you've kind of settled into after all your study and all your reading. This is the way that you operate and trade. Now, do you still have Formula Capital? Is your hedge fund still around and active?
Yes.
And is this
so we trade some client money, some family office money, my own money, my partner's money. We were running a fund of hedge funds for a while, and in 2006. Early 2007, I didn't really like the way the hedge fund world was going, and so we were doing great. We had great returns, but we decided to unwind that part of our business. But we continued with our trading and investing. Okay.
So again, is this your style of the way that you like to trade and invest, or are you a pullback buyer, a pullback seller? Do you like to continue? Are you a trend rider when it comes to trading?
On the whole, I would say I'm a combination between fundamentals and buying pullbacks. So I hate to use the word contrarian, but like when a stock's like crashing down, that's when I tend to look for an opportunity to buy it.
But you're not buying it. You're not buying it blindly just because the bottom's falling out of it. You've done your work on it, and obviously.
Yeah, I used to buy it more blindly, and that approach worked. But it worked more in like 2002, 2003, 2004. Now I think you kind of have to have a sense of the fundamentals because stocks will go to zero in this environment in a somewhat straight line.
Yes, they will.
But I'll give you though. But no stock. Oh, I'm sorry. 1 second again. I'm just going through the. Okay, good. One system actually, which I just posted on the Wall Street Journal website, which I like, which sort of demonstrates that stocks don't go down in a straight line, is a system I call the 4x2 system. So I'll just describe it. It's a very simple to understand system, and it's worked every single year, including 2008, even though it's a long only system. So you take a stock, if it goes down for 4 days in a row, you buy it at the close of the fourth day, and you simply hold it until it goes up 2 days in a row.
Okay.
So if it keeps going down, you keep holding it, and then anytime it just goes up 2 days in a row, even if whether or not you're below or above your entry price, you get rid of it.
Right. So you buy it at $10. The next 3 days it drives down to $7. But then the next 2 days it goes up to 9.5. You're out at 9.5. You lose your 50 cents.
That's right. Or hopefully it goes up the next 2 days after you buy it and you're out at 12.
Any other parameters you play on it? I mean, is there volume? Is it all stocks?
Nope.
Okay.
It's all stocks. I've tested this on the S&P 1500, so the top 1500 stocks of the S&P, or of the market. And it's a good, solid little system with hardly any down months. October '08 was a down month, but November '08 was a huge up month in the system. And I actually was playing it then and did well with it. and it's a good, solid little play.
So again, we talked a little bit off camera before you came on, the difference between quantitative, substantive trading like you're doing versus a technical guy looking at price, support, and resistance, very different things. Tell me a little bit about how you differentiate and look at and do back testing and find things like you just talked about. How do you go about finding these types of plays, these snapback plays?
Well, a lot of it is just from looking at common sense. So let's say your favorite stock, I don't know, call it Apple. Let's say they have bad earnings. And, okay, of course, the first day they're going to go down. Then maybe the second day they're down. Let's say the third day they're down. Now you're thinking to yourself, wow, it's down 3 days in a row. Then it's down the fourth day. Who is waking up on the fifth day and saying, you know what? I held it that first day. I held it that second day. I even held that third. I'm loyal to Apple. I hold it for 4 days. Now I'm finally, the thing I really have to do today is finally sell Apple. I'm the last guy in line to sell Apple. Chances are, and it turns out statistically this is true, chances are that type of person already sold during the first 4 days. The selling's been exhausted.
I agree.
And I used to hear this from specialists who trade on the floor all the time. After earnings, wait 3 days. So I decided to actually test this, and it was pretty interesting.
Yeah.
And so, but there could be some selling left over. But when it comes back, when all the selling really is finished, okay, there's no selling, there's only buying. So the stock shoots up. And so, do you get out on the first day or the second day? It was sort of arbitrary. I picked 2 days there. It just tested the best. And over time, this system has worked well. And I've been trading it on and off for 4 or 5 years.
Cool. But you did say something. It only works for you really pretty much on the long side. So you're not selling a stock up 4 days in a row. It is not as effective on the short side.
That's right. It does not work on the short side.
Okay.
You know what's really funny?
Yeah.
Nothing works on the short side. There's almost no system you can play that works on the short side. At least one that I found.
I got one. It's longer term. It's longer term in nature.
Okay.
It's not.
Well, I had one once actually that I called the sweet spot, and it was beautiful. If the Nasdaq futures were gapping up between 0.4 and 0.6%, that's the sweet spot. You can short for 0.5%. You're usually out by noon. Okay, short at the open, get out by noon. And it worked. It actually worked something like 70 out of 70 times when I did the back test. I wrote about it just once on I was playing it. It was an ATM machine. I wrote about it just once on realmoney.com. Bam, it stopped working.
Yeah, well, why don't you talk about it? Well, here it is. Here it is on the weekly chart. Take a weekly chart with a 10-minute EMA, and anytime you get a price bar on a weekly chart that after at least a 6-month run to one direction or the other, up, what we're talking about a short setup. You can use it both ways, actually. If you've gone up at least 6 months in a row, the longer the better, and you get a price bar that breaks under the 10-minute exponential moving average, okay, on a weekly chart, a price bar that's not touching that line at all. It can't touch it. Cannot touch it. So you get one bar completely below, time to get short, you'll make money. Put your stop in about
because everybody piles in. Everybody's piling in at that point.
Yep.
And it's like a fast move. So it's the beginning of a fast move.
It'll happen in 6 months. Absolutely.
Okay, so it's a 6-month move.
Yeah.
That's interesting. All right, I'll test that. That's a testable pattern.
Test that one out. It's very testable, and it is a pattern. So, I cross over. I guess I'm more of a quantitative tech guy myself. So I want to ask you.
What do you use? What do you use to back test?
What do I use to back test? I've got some different programs that CQG and things like that I can run back tests.
Okay.
Yeah. How about you? What do you use?
I use Wealth Lab.
Yeah.
Wealth Lab?
Yeah, I do. Now you brought up again. You were an internet guy. You're a computer scientist. You studied CS at Cornell. Your parents are in the biz, so you're definitely got the mind for all these scenarios. You created StockTicker.com.
Stock Picker.
Stock Picker. Excuse me, I misspoke. Yes.
No problem.
So
yes.
How did you come up? How did you come up with that? And is it? I've not used it, to be honest with you. I've used Trade Ideas and programs like that. Is it similar to that?
You haven't used StockPicker.com?
I'm not a stock guy too much anymore. I play mostly in futures and commodities and Forex. So I have for the last 5 years. So.
Yeah. So, it's a long story to how I came up with it. Is that okay? We got a few minutes here?
I'm good. Yeah. It's great.
So I was running my fund of hedge funds. So I had invested in, about 15 different hedge funds, and we were doing well. And, an investment bank, a small investment bank, wanted to buy the company, wanted to buy my fund of funds. And I thought, this is great. I'll join their bank and make some money and sell them the fund of funds. So they made an offer to myself and my business partner, and the part of the deal was they needed me to sign a 6-year employment agreement. 6 years. So it's like slavery a little bit.
Yeah.
Yeah. Oh no, not just a non-compete, an employment agreement. I had to work for them for 6 years or else they would unwind the entire deal. So it occurred to me and my business partner, we were sitting in an airport, and we were like, you know what? There's no equity value to this business if they're still requiring us to sign 6-year employment agreements. So it was sort of at that time that we started unwinding that business, and we said to ourselves, okay, let's go to plan B. So I've been writing a lot about Warren Buffett and George Soros and Carl Icahn and their stock picks, and their stock picks were always doing well because they're smart guys, and when they pick a stock, they've done a lot of homework. And so I approached a huge multi-billion-dollar hedge fund about giving us some money to trade an approach of just piggybacking the top 30 or 40 super investors, all of whom I knew, many of whom I knew personally just because I was writing about them and I was in the hedge fund business and so on. So I always kind of knew what was going on with their positions. And the hedge fund that we approached liked this idea. They offered to let us trade about $100 million with it. But there was a lot of conditions. One is they wanted us to short against each position, and they had a high hurdle rate, so we had to return over 7% before we could make any money. And they also wanted me to stop all my other activities, like my writing, everything. And so I just couldn't take the risk of putting all my other things on hold I didn't really know how the hedging approach would work for this strategy. For all I knew, I could do it, not make any money, and give up everything else I was working on. So what we did instead was we said no to them, and we simply created a website, stockpicker.com, where we uploaded the portfolios of all the investors we wanted to piggyback. And then we allowed you and everybody else to upload their own portfolios, and then I wrote some software to basically, given what your portfolio was, here's some stock picks based on the correlation between your portfolio and the super investor's portfolio. Then we added other features like Stock Picker Answers, so you could ask a question and other investors could answer. And we just kept adding more and more features. And it was really an exciting site. I mean, at our peak, we were getting up to a million unique users a month. So it was fun. It was useful.
This is a great trade there, if you will, because again, you were offered a lot of, on paper, interesting opportunities. $100 million fund, selling your company for this money, but you had to do these things. So there was a trade-off, if you will, into all those all those deals, and you basically passed on the trade and went to the trade where you created your own product. And I hear the passion in what you created is probably the best trade you could have made there.
Oh yeah, absolutely. There was no decision I could have made that would have been, for one thing, the bank that we could have sold our company to, in part for stock. That bank went out of business. I won't name any names, but it went under. Yeah. And so that was good that we didn't do that. And then, I honestly don't know how the strategy would have traded, particularly if I had to hedge every position. But I was a believer in following Warren Buffett's picks and the top 30 or so investors that we were following. Not only that, I've been in the financial media business for a long time too. I mean, I've written, as you mentioned, for many different sites. I've also written for different newspapers, and I've been involved in the space quite a bit. And what I really wanted for myself was a financial media site without the media. Right. I just wanted raw stock ideas, and I had this visceral feeling, just based on the reaction to my own articles, that that's what the audience wanted too. So I created that site for them. Like, basically, imagine a site. There's hundreds of thousands of lists of stock ideas on this site now, and it's great. If you want a site like all the stocks about Greece, I'm sure right now we can go to that site and there's a portfolio on there, stocks related to Greece. So it was great. Look, Jim Cramer used to look all over the site each week for ideas for his Mad Money show. We would exchange ideas all each weekend based on what was on StockPicker. And eventually, TheStreet.com acquired the site. I want to add, I'm no longer involved with it.
Okay. James, again, writing about the financial media and be involved in it, I'm curious, have you gotten the satisfaction of what you expected in getting into the media business, whether it's writing, video, your books? You've done very, very varied formats. And I'm just curious, has it been to your satisfaction or more of a shrewd business move for you, to get into that side of the business?
It was both because, I had a very odd background for somebody getting into investing. I mean, like I mentioned, I kind of started my professional career working for HBO, doing stuff not related to finance at all. And then, I moved into making websites for all these different entertainment companies and music labels and so on. So I really didn't have a financial background. I didn't go to Wharton Business School and then become a trader at Goldman Sachs and then start a $3 billion hedge fund coming out of Goldman Sachs. So I had to figure out some way that I could say I had some pedigree. So if somebody, sees me in the Financial Times or at TheStreet.com or now, at AOL or WSJ.com or wherever, it's part of everybody brands themselves in their own way, and it's part of my way of branding myself. But I do enjoy it. I mean, I enjoy the writing, and I've been very fortunate that, every place I've written for has let me do whatever I wanted. I mean, I want to tell you, the Financial Times, they would tell me to write about the craziest stuff each week. I mean, they wouldn't tell me what to write, but they said, whatever you want to write about, go for it. And I would try to get fired by them, and try to write as crazy as stuff as possible, but I could never do it.
So, you brought up a good point. So some of the things that you've written about, are you, anything that sticks in your craw, like, wow, this is going to shock people, and then what's the reaction? Is there some resonation between what you think people are going to react, the way they're going to react versus reality? What happens when you write articles that you think will elicit this response and you get a whole different response?
Well, yes. I mean, a lot of times, when I'm writing about serious stock ideas, I want those stock ideas to work out, and I want people to feel happy that they made money because of my ideas. So that there's a lot of pleasure out of that. And oftentimes, people have their own agendas though. If I'm writing about a stock that I think is a long and somebody short it, they might decide to use personal insults to kind of argue with my article, and they'll send me emails or post on message boards. So that's a bit painful. Yeah. But sometimes I write an article because I want it to be entertaining. And I wrote an article once. I wrote a book review of my first 3 books, and I trashed them all. And so that was a fun article. And then another time I wrote a very kind of tell-all confession about the process of writing my 4th book, and I think it surprised my publisher of that. So I've written a lot of articles with the idea in mind to make people laugh as well.
Do you when your kids say, "Hey, Dad, what do you do for a living?" What's your response? Are you a financial media or a writer first? What are you? How do you describe yourself to people?
My kids have not asked. My kids just could care less like what I do. They have not asked me this somehow. I don't know how. I honestly don't know how I would respond.
Okay, my kids. By the way, I'm here in Bend, Oregon, and my office is above Goodies Ice Cream and Candy Shop. My 6-year-old says Dad works at Goodies, so That's
great.
I am serving ice cream all
That
day.
is the best place you could work.
All day here, every day.
Yeah.
A couple more questions for you. Do you still think Microsoft will buy AOL?
Could they buy it or will they buy it? I don't know. But should they buy it? I think yes, they should. Because look, they want traffic for MSN.com. They can't figure out how to really monetize that business. AOL is a cash machine. I mean, whatever you can say about the business model, and it is a declining business model, they're one of the largest websites on the planet, and they generate a ton of cash, like almost $1 billion in cash. Plus, there's a lot of assets they could spin off to generate even more cash. So you have an acquisition that pays for itself. Microsoft can basically buy AOL for free and get all that traffic. MSN.com plus AOL.com would be greater than Yahoo.com. So I think it's a smart buy for them.
Okay. How about Berkshire buying Burlington? What are your thoughts there?
I think that's smart, but look, I can't argue with Warren Buffett. He's been buying the railroads for a while. Like he bought 3 different railroad stocks, but Burlington was always his first love. He's really making a bet on China with that bet. He said it was a bet on America, but I'm saying that's basically a bet on China. He's saying China's going to buy all these commodities. Where are they going to buy them from? They're going to buy them from the Midwest, and the Midwest is going to ship them via rail to California. He did say that he thinks the West is going to do better than the East, and I think that, again, is partly because he thinks commodities are going to ship to the West before going off to China. So I think this is really a backdoor play on China, and I think in the long run it'll do very well for him, like most of his other big bets.
You just popped something in my mind. If you do a search on Google and just say where is the median point of population in the United States today, and draw a trend line from the first pilgrims in the 15th, 16th century, where do you think we are right now? Median demographic hub of the United States of America.
By demographic, you mean population?
Yeah, if you took the whole population of this country, we started in Jamestown, let's say, on that right side. Yeah. Where do you think we are on, if you looked at it demographically in the country now?
Well, geographically, I know the center is Kansas, and you figure California is bigger than New York. Texas is big. I'd have to go with the geographic center as the demographic center, so Kansas.
You're pretty close. I mean, when we're done, seriously, do a wiki. You'll find it. There's a nice graph. It's Southwest Missouri, almost out of Missouri now. Is where the demographic.
Oh, that's right next to Kansas. Yeah,
that's where the median is. So good thinking. Again, let's keep going with this blitz questioning, if you will. Obama, will he be reelected? It's 3 years out, but will he be reelected?
Well, if you overlay Clinton's approval ratings on top of Obama's approval ratings, you probably see a very similar thing. If anything, Obama is probably going down a little bit faster than Clinton was at this time in 1993, 1994. But my guess is it's going to be hard to unseat Obama. The Republicans don't have it together at the moment. The Democrats don't have anyone to challenge him. Could there be a sizable third party? I think the third party idea is going to get very interesting in 2012. That's my main prediction there. I wrote an article on the Huffington Post who I think the potential third party candidates could be for 2012, and I think it's an interesting list. Yeah. But I think Obama odds are at least 51% chance he's reelected.
All right. Position on mark-to-market accounting.
I'm very much against mark-to-market accounting.
Why?
Because mark-to-market accounting is great 95% or 99% of the time, but there's that 1% of the time when you have to ask yourself, for an illiquid asset, what is the market? Well, what happens if your market for an illiquid asset happens to be a very highly manipulated market, like this ABX index that was being used to mark all these asset-backed securities? Well, that was heavily manipulated by hedge funds. Everybody knew it was being manipulated. It was illiquid in itself, so it was easily manipulated. And trillions of dollars in assets had to be marked down to, because of that ABX market. I'll give you a great example. We all knew housing was collapsing in 2007. IndyMac, you had all these companies that were having problems in 2007. Housing prices were already going down. They were already plummeting. But the market wasn't crashing. November 2007, the rule changed, FASB 157 changed. It was now mark to market instead of mark to model. And it was all downhill after that. The stock market crashed. In fact, the stock market peaked right when we made that rule change.
We're talking about it again. Yeah, I agree. Okay, how about software? You working on any software products that you're thinking to coming to market with at this point?
Yes, actually. I'm working on a product with another group of guys who are very good. We're creating we're not ready to launch it yet, but we will be within the next few weeks. We're creating a platform to allow any blogger out there to create a subscription, their own subscription newsletter. It's sort of interesting. There's actually there's no plug and play solution out there for if you, Matt, wanted to create your own newsletter recommending stocks and have a subscription and have different, subscriber categories and have, be able to email out to everybody and handle customer service and accept credit cards. You can't do it. I challenge you to find a way to do it. You just simply can't unless you pay a lot of money to developers and a whole team, or you use some big distributor who takes 80% of the profits.
Right.
We're creating basically a solution to solve that problem for bloggers like you and me.
And on that, you're going to start your own newsletter, I would assume.
Yes.
And that's going to come out in the next couple of weeks. So I see why you're.
That's right.
I see why you're tying the two together, and that makes a lot of sense. Let's play a quick little game here of the last trade you've taken from these types of setups. Just think, whatever it comes to mind, real quick. Give me the trade. What's the last scalp trade? What's the last scalp you've done?
I'm ashamed to admit it, but Citigroup today. I bought at 318 and I sold at 319.
Swing trade.
A short guarantee, a go, AGO. It's not quite a swing trade, it's a long-term trade for me, but that means a few months. So that's a swing trade, right? Or no?
Yeah.
Swing trade's like a few days.
Yeah, no, that's fine. A couple months.
Okay.
How about a directional bet? What's a big macro bet you're making right now?
I don't really make big directional bets.
Okay. How about a
I
fade?
can't think of it.
How about a fade? What are you fading right now?
I wrote an article a few weeks ago saying Blue Nile, was a stock you should short going into earnings. They had earnings today after the close. Earnings were horrible, as I predicted, and the stock is trading down 13% after hours. So that was a fade.
Congratulations on that one. It's a fantastic.
Thank you.
How about a breakout? A breakout play?
No, I don't really play breakouts.
Neither side, long or short. You don't play breakouts. Okay, so that tells us a
No.
little bit about it. One final question, I'll let you go. How many hours do you sleep in a day?
I'm a very poor sleeper. I do attempt to sleep 8 hours, but I wake up throughout the night, and I usually spend like an hour or two reading in the middle of the night. So I need to sleep better.
I think it's the bane of this business. It's hard to shut off, isn't it? I've been on
That's true.
I've been on this cycle the last week where I've been going to bed at 9:30, 10 here on the West Coast, and I've been waking up at 1, staring at the clock between 1 and 1:17 the last week, and I'm going, why am I getting up? It's brutal. It's brutal.
Yeah, because it's not like you're going to trade on the information, but it's nice to see when you're waking up at 1, that's when Europe is opening. Yeah. So you want to see how it opens and how the futures react.
Yeah, well, you got to turn it off. So, I mean, you don't trade you don't trade around the clock, do you? Are you trading all the time?
No.
I keep it.
No, just during the trading hours.
I keep it to East Coast hours myself, even though I'm here on the West Coast. Well, thanks, James. I appreciate your time. We can follow you. Again, your website is, first of all, Twitter at Altucher at J Altucher. Your website.
Well, I'm going to set up jamesaltucher.com so you can follow me there. But right now, I write on a regular basis for WSJ.com, AOL.com, HuffingtonPost.com, NewYorkPost.com, SeekingAlpha.com, and others.
Well, keep up the good work. You provide a lot of thought-provoking information out there for me, and I enjoy reading you. And I'd love to have you back on here and talking more on these subjects. But I've taken enough of your time, so I appreciate you taking the time with us.
Oh, no problem, Matt. Thanks a lot. I'm happy to come back anytime.
Okay, great.